Alright, let's talk about Bollinger Bands. So the first thing, how do we put Bollinger Bands on our charts? So if we go to indicators, type in Bollinger, and you want the ones with no strategy, just Bollinger Bands. And as always, the first thing, let's make it look a little bit nicer. So if we go into the settings for Bollinger Bands, the only thing I'm going to change here is removing this background. So it's like a cloudy blue currently. Just remove that. Cleans it up, makes it a little bit more clear. The actual line colors you can certainly change per preference, but I will leave them blue and orange for the sake of this. And so what is the Bollinger Band actually showing us? Like, what is this indicator, what formula is it using? So if I open up this settings menu again, we can see that this orange line is being called our basis. And the upper and lower are just called upper and lower bands. And so this top band makes up the upper Bollinger Band, as it's named, and the lower half is the lower Bollinger Band. So the inputs on this, and so what we have that's really important here is the length. So Bollinger Bands are always going to default to a length of 20, and so this means 20 of whatever unit. So right now I'm on 4 hour. And so this orange line is the simple moving average of the last 20 candles before it, using the closing as the source of that. And so again, that's the orange line is the 24-hour moving average in this case. If I go up to a higher time frame, it'll change that. So this will always stay 20 in this case, and it changes per time frame of the chart. The upper and lower bands are really being dictated by the standard deviation value. And so the standard deviation is taking the data used to make this orange average, so the simple moving average, and it's taking two standard deviations, and it's adding, it's taking two standard deviations and adding to the top of it to get the upper limit, and then subtracting to the bottom of it to get the lower limit. And so what that means is that the upper and lower bands are always equally far away from this orange standard moving average line. And so what that really means mathematically is it just means that based on the two standard deviations, the default settings that are here, the 20 candle length for the moving average and two standard deviations, it means that there's an 85% chance that the candles will be within these two bands, at any given time. And so you can obviously, play around with these settings, kind of dependent on strategies, but it's, leave them default for a while, but just know that it means that, 85% chance that the price action stays within these bands. And when it goes out, it's considered a rare occurrence. And that's really where, the trading strategies of Bollinger Bands comes into play. And so that really takes us to, the first strategy of Bollinger Bands. And it's, kind of the most, kind of simplistic to think of, is that, if the price action is supposed to be in these bands, 85% chance that that's the most likely outcome, then the most common strategy is that anytime the price leaves those bands, let's look at this scenario right here, anytime that the price leaves those bands, you're expecting it to move back into the bands. And so a lot of people will trade based on that idea that, this price left the band right here, and it did actually get pulled, the candles closed right inside of the Bollinger Bands themselves, and the price went the other direction. And so a lot of people trade kind of that idea. And so we have another scenario here where the price had left the band and then it goes the other direction. So you could have long that idea, basically saying that, odds are the price will come back into play here. And so again, the same thing, price left the bands and moves the other direction. And so one of the most common things with Bollinger Bands and what a lot of people will use it for is that trading the range idea. And so, enter a short, exit it, enter a long, exit it, enter the short, probably exit it here. You probably wouldn't have had that, but you can see how that kind of plays through. And I would say that that's probably the most kind of simple strategy to use with Bollinger Bands, because it's really only using, if you're outside of this main band, it's, you're just kind of using the extremes for trading. You can put a lot more components into it, and some people do, where a lot of people will actually take into account the moving average that's in the middle. And so essentially what they'll do is one example is to essentially trade your short here because the price has left the band, or even here, and to not actually exit it until the price is back on top of this other moving average. Or some people will actually use the moving average as support, and so if this left here, take profits early as soon as it touches that moving average support level. And again, that's all stuff that is very preferential per person. There's a lot of ways to use Bollinger Bands, and you'll see a lot of different strategies show up. And a lot of them actually deriving from standard stock markets rather than crypto markets. Bollinger Bands are super common for major financial groups. One other thing that a lot of people, and it's kind of, if this is inherently built into this idea of if price action leaves the bands, it's going to go the other direction and do the same thing, and it's going to go back in. One of the ideas that's really built into that inherently is that a lot of people use Bollinger Bands to identify an overbought or oversold market. Again, I mean, based on the moving average, this is only taking into account prices and not actually volume, and so it's kind of used to infer overbought. Essentially saying that if the price is so overextended in these Bollinger Bands, it's sitting on the bottom, this is oversold conditions for so long that you can expect a bounce. Obviously in this case it doesn't always time those bounces perfectly, but a lot of people use the Bollinger Bands to identify overbought, oversold conditions. And again, it's just using the idea that whatever the price action average is, the price will always kind of be a magnet back towards that. So anytime it deviates far away from it, it's bound to come back eventually. And that's for the most part true. Again, I highly recommend that for any Bollinger Band strategy that it gets back tested. Another important fact for Bollinger Bands, and I'm not pulling any specific examples here, I'm just going back to any historic price. So this is just Ethereum back in early 2022. One thing that is important is because the Bollinger Bands use standard deviations and price action, what we'll notice is that there's areas where this band gets much narrower than other times, and so we have a really wide band here on the left, and it gets tighter on the right side here. And so what that means is that the average price, the standard deviation of the average price over the last 20 candles, is closing in, and we can actually see exactly where that would be. That's this whole range here that it's taking into account, where the price didn't move a whole lot. And so a lot of people actually use these band squeezes as an idea that volatility is coming. And that's often the case, is that when these bands do squeeze together, they're squeezing together, what ends up happening almost immediately afterwards is some big move. And so in this case it was a big move upwards. And so if you combine that idea of band squeezing with other indicators, other trading strategies to kind of get an idea of if the market should go higher or lower, you can really be a part of these bigger moves like that. And that's a way that that's another strategy of Bollinger Bands that doesn't rely on actually using the bands to enter and exit, but it's actually using that standard deviation value to anticipate that some sort of market volatility might be arising. And it's I think worthwhile to note that in the scenarios where that does happen, where you have the price squeeze and the big moves occur, those are often times where you see the price kind of sit onto one of these bands for an extended period. And so like here we this whole run up, this moving average wasn't touched again, and this would have been a 16-17% run up where the top band was being just held the whole time. And we saw this back here, kind of the inverse of that. Is this exact thing, the strong move downward where the price action just held on to this lower band the entire time. And again, I guess to give another idea about one scenario where you might be able to change these things, if your strategy is to kind of play those swings and you're still interested in let me sell at the top band or buy at the lower band, one of those strategies might be that you see, hey, there's a lot of noise here where this price action is sitting on the lower band. If you go in here and you increase the standard deviation, let's move it higher, maybe 3. Let's move it up to 3, and we'll see how much these bands expand, and you might get less signals. And so we increase that, now we see that this price the whole time actually was riding this band just on the inside. Maybe one touch there, and it didn't actually touch until, really at the bottom of this. And so that's one of the ways that, there's no perfect way to trade the Bollinger Bands. It's definitely a matter of, find the strategy that works. And then, again, you can really tailor this to, I can go to 2. No, I can't go to 2.5. Just whole numbers, actually. So you can really tailor it to, each strategy and find the way that works for you, because Bollinger Bands do give a lot of information. It's just a matter of understanding what you're seeing. And I believe that's really all. I'm not getting too much into really how to use Bollinger Bands. I just want to kind of introduce, the ideas behind them, because, how to use them is really up to different people, and they do work on all time frames. I think that they're certainly more arguably valuable for, smaller time frame trading. Going out to the daily, you get, different levels of signal. And again, this is all strategy based. But actually, there's a nice little example here where, the price is certainly squeezing here, and that's what, initiated this last bit of price run up. And so, this run up is, it's a 60% move right there based on, just following this price squeezing. Again, that doesn't say if it was going down or going up, but hopefully you can see some of the value in this. And much like anything, I highly recommend with Bollinger Bands, definitely, backtest the idea, see if it works, and I think very, very importantly, see if it works in bullish and bearish markets. This is definitely one of the strategies where if you're riding certain bands, the market turns the other direction, and you might have to actually, invert the strategy. But Bollinger Bands are, certainly one of the most popular indicators, and so being aware of what they are, trying to figure out how to use it, seeing if it fits your strategy, I highly recommend at least investigating it. But yeah, no, that's the whole strategy.